How do they get the milk out of the oats? I didn't. Good Monday morning to you. My name's Jason Graneman. You're watching the Economic Market Weather Report. I am your lone slayer for the day, where we analyze the weather. I mean, the market. Well, I think the weather is more predictable than the market. Let's get into it. In the equity sector, the Dow is inching up. Now, it's still in that what I call flat range, but it's on the positive side. So it's looking sunny. Maybe a few clouds today over on the Dow, but it wants to keep going. It wants to stay above 36,000 right now. Will it stay above 36 going into the holidays? We'll find out. On the treasuries, the bond market, well, it's down just a pinch, like a pinch of salt. It's slightly down. It is still up above 1.5. Again, that 1.57 number that I was talking about last week, it seems to be still hitting that 1.57. It's partly cloudy. I mean, we may even see some cool temperatures today on the Treasury side, but the good news is it's not up. I don't think in the range where it's going to make an impact in the realm that it's in. So if the numbers don't change at all, then we should see the mortgage rates today stay the same, or what we call unchanged from Friday. So the good news might be that they're unchanged and they're not up, but have we met a new baseline? That's what I'm looking at. I'm trying to find out if there's a new baseline. Is there a new bottom? Should we be looking for that dip below 1.5 in order to see significant improvement in the cost of mortgages? That's my question on the table right now. So that's where I'm at. I'm analyzing the 10-year Treasury and trying to look at the possibilities or the indicators of what would bring it down. We definitely need some more money to be injected into the bond market for that to happen. The big question is, where's it going to come from and when? With the Dow and the overall equities, even NASDAQ is up this morning. With money being made in equities, typically your bond market is not going to see improvements. It's all about follow the money. And we've all heard that before, but it's true. Follow the money and you can, to some degree, anticipate where things are going to improve and or decline in the marketplace. In other news related to the market, Oatly, the oat milk company, Oatly took a loss on their forecast of revenue by 3 cents. That means they were up 7 cents, yet they were looking at projections of 10 cents per share. Well, that resulted in a loss of revenue. The stock's down a little bit. Now, Oatly did come out and say that they will ramp up their production. So they're going to go out and milk even more oats. I don't want to know what that looks like. Tesla, back in the news. Well, nothing of major concern. Hardly even newsworthy, but their stock's down 2.1%, at least in the pre-market. That number, I'm sure, will change throughout the day. But pre-market 2.1% decline, that's really on their numbers about flat. Keep in mind, they're coming off of a 11-week run. Their stock has been up for the last 11 weeks, not days, weeks. So they've had quite a run. Remember, that up, down, that bounce. At some point, you have to expect that a stock is going to come off of these types of increases, especially over an 11-week period of time. You can't predict it, but you should expect it. Some might be profit takers, whatever. Now, the interesting thing about Tesla is, a week ago, their fearless leader, Elon Musk, took out $5 billion. The day that it broke that he cashed out $5 billion in stock, the stock went up. Now, I find that interesting. Now, he still owns 160 million shares, so he still has $1 billion stake in the company. And so this isn't alarming, but sometimes math in the economic industry doesn't necessarily add up. Typically, when your fearless leader sells stock, the prices tend to come down. Again, if the largest stakeholder in a company begins to sell off their stock, well, that would mean that their confidence level typically is not there. They're taking out their investment. Now, again, this is pennies on the dollar for Elon Musk's situation, so I don't really expect the stock price to come down on that news. I'm merely sharing with you that anytime you hear or see a large stakeholder remove stock from a company, my anticipation would be the price would come down from there. Now, this situation obviously is unique, but to share with you on how to analyze and read the market, which is what this channel is all about, that's typically the pattern. Like I say, 2 plus 2 doesn't always equal 4. Dollar Tree in the news, well, they're up 8.3%, and at the time of this video, the market hadn't even opened yet. That's a huge gain. Now, a company called Mantle Ridge invested a stake in the company. And according to the Wall Street Journal, Mantle Ridge wants them to take more action at increasing the stock price. So I invest a lot of money in your company, and I look at you and say, please, let's get that stock price up. Probably sounds like every board meeting. I don't know. You be the judge on that. Getting back to Dollar Tree, it's an interesting sector, and this is an interesting indicator. Looking at the current state of our economics, we're in an inflationary period. Well, Dollar Tree, being in the sector that it's in, discounted retail goods, when you're in inflation, you typically will see people be attracted to discounted items, especially a company like Dollar Tree, where they offer many run-of-the-mill items that you would find at a grocery retailer, yet they're at a significant discount. So in inflationary times, it's very attractive for the population to move their money over and begin to buy things at a discount. And Dollar Tree does that. They've done it for a long time. In fact, they built an empire on doing just that. Now, so being in inflationary times and turning our focus to a sector that offers discounted goods on a mass scale is a very interesting look. It doesn't surprise me at all that their stock would be up, and it also doesn't surprise me at all that a company or even a large investor would want to get in and help that company make more money and obviously make a return on their investment. So it could be a very interesting sector to look at and watch. I mean, even oil is up over the last month or two quite a bit, but noteworthy today, oil is just under $80 a barrel, at least in pre-market. We've only seen that one other time in the last 30 days. But oil is one of those indicators that you can watch and understand from its movement, whether we're in inflation or deflation. Cost of oil, we could all certainly benefit from the cost coming down. Well, today it's showing a small sign of weakness, being just under $80 a barrel. But keep your eye on oil. That's something that obviously $80 a barrel is still going to have an effect on our gas prices. If there's a topic that you would like more information on that's market related or mortgage related, put that in the comments below. I would love to know more about what you're looking for. This is a channel about learning. I'm going to show you the things that the news won't teach you and the commercials won't tell you. So please let me know in the comments what you would like to see more of. Now, I don't know everything, but what I do know is I can share with you what I do know. Thank you very much for watching. My name's Jason Granneman. I've been your Loan Slayer for the day. And remember, it's not work, It's a lifestyle. Cheers.
It's like 2 + 2 = fish.